everybody. This is Ray Halstead. I've got Andrew McMillan here with me. We are CPAs with REH CPA. We help small business owners with bookkeeping, payroll, and tax preparation, as well as we provide advisory services to those small business owners. We operate here in the Mooresville area, as well as the surrounding region, including Charlotte, Huntersville, Cornelius. Really, we can help you no matter where you are, but that's our main operating area. I got Andrew McMillan here with me today. Andrew, one of the biggest things that's come out in the past couple years that a lot of small business owners really don't ask too much about, because it's kind of one of those things that it's kind of a complex area. So a lot of them aren't really aware that it really exists, but it's probably one of the biggest pieces of tax legislation that was passed, since I've been doing returns. And it's what's called the QBI deduction, or qualified business income deduction. You mind going over that a little bit with us, so that way our listeners can understand a little bit more about the QBI and whether or not they would qualify?
Yeah, I'm happy to go over it as I laugh, because it definitely can get complicated.
Absolutely.
But the good news is, at a high level, this deduction's not horrible to get on your tax return. So the QBI deduction is what's known as the Qualified Business Income Deduction, and it was enacted in 2018 as part of the Tax Cut and Jobs Act. So really what this deduction is it's a 20% deduction on pass-through income. So pass-through income is going to be, for small business owners, it's going to be your income from an S corporation, income from a partnership, or a sole proprietorship. So you're going to get a 20% tax deduction off of that income. You're going to get a 20% tax deduction off of that income. So it's a fantastic deduction for small business owners. And like you kind of alluded to, we don't get asked a whole lot about it. Not everyone knows it's there, but it is something. It's huge. It's really huge. So, like I said, with every tax deduction that the IRS puts out there, there's oftentimes complications, nuances, and limitations to it.
Absolutely.
So this one's no different. So the good news is, if you're single and you make less than approximately $160,000, it changes every year. It's going to go up with inflation. But if you're single, less than $160,000 in income, or if you're married and you make less than about $330,000, in that range, the deduction is going to be relatively simple to get on your tax return. But if your income gets above those ranges, I really highly recommend making sure you get with a CPA who understands this deduction and knows how it works, because there's going to be limitations that start to come into play. One limitation is making sure you have enough wages paid out of your business. Another limitation is going to be if you're what's known as a specified service trade or business. These are going to be guys like CPAs, attorneys, consultants. And if you're in one of these specified service trade or businesses, healthcare, it starts getting limited, and it's going to get complicated.
It gets phases out too.
It starts phasing out. So
lucky us, right?
Right. So it's a great deduction that's out there.
Absolutely.
You want to be aware of it, and you really want to talk with your CPA before the end of the year to make sure that you have a discussion around the deduction, see if you're qualifying for it, and if you're not qualifying for it, see if there's something that you can do that helps you start to qualify for it. Because usually with some simple tax planning and some conversations before the end of the year, we can make sure you're maximizing that deduction.
Absolutely. No, that's really great information, and I think a lot of this, how this whole thing stemmed was from when they reduced the C corporation tax rate down to a flat 21%. Well, everybody was basically just going to go convert to a C corporation.
Right.
Well, to kind of stop this mass exodus over to C corporations, they had to come up with something to put all the other business owners on a level footing with the C corps. And with that 20% deduction, it does that. So, sometimes we have to look and make sure your entity still makes sense. So there's some tax planning that can be done there. So you'd absolutely want to come see us for tax planning to see if you are structured properly to take full advantage of that QBI deduction. Because there are some cases where we have to tell people, hey man, you got to go pay yourself more payroll.
Right.
Because you start hitting certain limitations. There is a 50% of W-2 limitation once you start hitting certain AGI thresholds. And if you didn't pay at least if your QBI deduction would be greater than that 50% of that W-2 wage, then you want to go cut a payroll potentially to take full advantage of that QBI deduction. We help clients do that a good bit during tax season. And how many times we had to go to people and say, hey, man, cut a big bonus check so that way we can maximize this QBI deduction and get the biggest benefit for our client.
Yeah, that's one of the biggest things that I just cringe when I'm doing a tax return in April, March, and I'm like, man, if only I had the opportunity to talk to them before the end of the year, because we could have helped them save, additional money on this tax return.
Absolutely.
But once the year's done and gone, there's just
it's all about being
back.
proactive, right? Being
It is.
proactive, doing proactive tax planning. That's what we're here for, is to help you be proactive, make good decisions before the tax year is over, to maximize tax deductions, to save as much money as possible.
Sure. Yep.
Well, great. Andrew, I certainly appreciate that explanation. Of course, that QBI deduction, there are some more complexities to it. We'd be more than happy to go over it with you, more than happy to look at your situation and analyze it. Make sure you are structured properly. Make sure you're doing everything right to maximize that deduction. Feel free to give us a call or shoot us an email. Again, I'm Ray Halstead. This is Andrew McMillan. We're with REH CPA, and we look forward to hearing from you.